Hey everybody, Chuck Barone here. Friday, October the 21st, 2022. October is gliding into a close here. What a crazy month, more crazy stuff. I can't wait to talk to you guys about what I think happened today. It's just more silliness, more unhinged nuttiness in this world, in this market. How is anybody possibly invest in this insanity right now? Anyway, before we start, as always, I want to thank everybody for your support, watching the videos, all the things you guys do every day. We appreciate it. I want to apologize for yesterday. I was not feeling well yesterday, could not get into the office. I'm going to make arrangements, I think, down the road where the 1 or 2, however many days per year I can't get to the office, I'll be able to film something from my house and forward it to Jake, my production king over here, and still get videos out even when I'm not able to get into my office to do them. Also, a special shout out to my buddy Greg Manarino. Greg's been a huge supporter. Actually, was the guy that yelled at me enough finally to get me to start this channel. Greg's support has been amazing. Most of the viewers watching this video right now probably came from Greg. Special shout out to my man Greg. We love you, brother. In the markets today, well, this was a crazy day. I'm going to have some commentary about this market today. But today, stocks up across the board, big rally. Stock market loving the news, the rumor that the Fed may pivot. I don't see it really happening. I mean, do we want to live with 8.5% inflation? Will that work? Will the Fed abandon its #1 mandate? I doubt it. But these rumors make everything rally. Anyway, more on that later. Stocks up across the board. So this weekend, even though it's probably still will be painful, if you want to take a peek at your 401k, it won't be as bad as it was, earlier this week or last week, right? The bond market has a small rally today, bringing rates down a little bit, crazy. The 10-year only down 1 basis point, sitting at 4.21%. The bond market did not rally the rally in the bonds was not as lively as it was in the stock market. Apparently, this foreign money that was the avalanche of money last month is now slowing down to a trickle. Rates are on their way up. The 2-year today coming down 12 basis points to 4.48%. I think what's happening is a 2-year at 4.6, not a terribly unattractive deal. I think that's coming down on demand. I think people are actually going to buy that 2-year at those rates. That brings down your yield 12 basis points today. The dollar down today, down more than a whole point on the index, down to 111.13. The dollar was over 114, so this is quite a come down for the dollar. I just don't know if it's real right now because it's rumors. It's rumors that are driving this market right now, not real news, and the dollar down on rumors today. With the dollar down, metals have a rally, with gold up almost $27 today, sitting at $16.55 last time I saw. Silver up 65 cents to $19.39 per ounce. Nice rally for metals. Not surprising, metals are moving up, the dollar moving down. Oil today up small, sitting at $85.17 per barrel of West Texas Intermediate. Natural gas, this is the one that's a puzzler to me, guys, sitting at 501 for their million BTUs. Done another 6.5 today, 6.5%. The natural gas was sitting at I want to say $9.33, 35 cents roughly. So to see it come tumbling all the way down to $5 is quite a surprise, knowing that winter's here and there's going to be demand for this gas. Buy now, Europe. Bitcoin up $1.50 today, or $150, I'm sorry, up $150 to $19,192. Bitcoin just hanging in its trough. I think it needs some definitive news on this economy. I think Bitcoin's something that's going to thrive when the economy is doing better than not so good. I think that a lot of investors would look at it a little more speculative. I'm not saying it is, saying that's the way investors would see it. So Bitcoin looking for a reason to go up, hasn't quite found it yet. Information today you guys need to hear. Well, first thing is we got the jobless claims. And this might have even been yesterday's news. But jobless claims falling again. initial jobless claims at least. So here we sit, guys. We got a 2 quarters negative of GDP, which tells us we're in a recession. At the same time we're in this recession, the economy basically chugging along, people hiring like crazy, less people collecting unemployment. The unemployment rate is as low as it's ever been, I believe. Jobless claims continue to keep falling. In spite of rumors and a lot of people talking about layoffs, it's only happening, as far as I know, in the real estate and finance mortgage business. Not so much anywhere else really in this economy. You got factory data coming in over this past week, all positive data. Factories holding up, manufacturing, what little we have left in this country holding up. Today we got bank earnings. JP Morgan, B of A had come out earlier. Bank earnings are great. They're loving these higher rates. Caterpillar earnings, good. Basically, earnings are coming in, with some exceptions, pretty good. Okay? So, are we in a recession or aren't we, guys? We know that the Federal Reserve is going to report positive GDP for the 3rd quarter. The Atlanta Fed Tracker tells us this, and it's been pretty accurate. Well, interesting stuff. Now, and this is all positive stuff for the economy. It makes it seem like the economy is not in recession. And you go to the other side of the coin. Interesting stuff today. 17% of mortgage contracts in September were canceled. 17%. That is a colossal, gigantic number. That's more than 60,000 transactions that were canceled last month for real estate. That's giving you an idea of what these higher rates are doing, and rates continue to climb. We're talking 7% for a conventional or a government loan right now. Well, at 7%, even if the median price was $350,000 and you put down a 5% down payment, you're still looking at a payment when you put in taxes and insurance and mortgage insurance, everything that goes into your payment. You're looking at a payment well above $2,700 at prices that are $100,000 less than they are today. Well, what does that tell you is going to happen with real estate? As I've been saying and I keep repeating myself, I want to make sure you guys understand this stuff. In real estate, one of 2 things is going to happen. One of 2 things. Either interest rates are going to come down to support the prices at real estate where they are, or prices are going to come down to support interest rates where they are. Can't have them both up. Both down would be nice, but can't have them both up. So what's going to happen is, in my opinion, prices are going to come down. Now, we know how our working class, my blue-collar brothers, the schmuckatellis, the people I'm talking to every day, we know what a pickle they're in. They're losing money in their 401ks. They're losing money in their investments. Their savings are down. The one thing they've been able to cling to over these past few years is their home equity. Well, now that's going to take a pretty big hit, I believe, because even if you brought the median down to $350,000, that's still a pretty big payment. How many first-time home buyers are there that, number one, can qualify for a payment like that, and number two, want to deal with a $2,750 mortgage payment every month? So real estate is in some real trouble here, guys. It's going to be fascinating to see how it plays out because, like I said, it's only one of those 2 scenarios that can happen. Now, a lot of people, and getting into what I really wanted to talk about today was a big rumor on the street about this Fed pivot thing, where the Fed was going to get back to easing policy rather than, what they've been doing, aggressively raising rates to kind of try to slow the economy down. So what happened is you got a couple of these, every month these Fed yo-yos got to go out there and talk. I guess they got to have their 15 minutes every month. I don't know what it is. Because whenever they talk, it makes things happen in the market, right? So last month the mantra was, We're going to stick to these rate increases. We have to tame inflation, getting inflation down. Having high inflation is worse than a recession. And on they went, being strong. We're going to continue. What do we get today? Now they're backpedaling. You got the chairman of a couple of chairmen out there talking today. Daly comes out and says that the Fed should consider slowing down rate hikes. You got another Fed chair, I can't remember who, was saying that they need to consider the economy with these rate hikes. So the cracks in the armor of the Federal Reserve are already starting to appear. The markets take this as gospel. Boom, everything rallies. Stocks, bonds, metals, dollar declines, right? Guys, how can anybody be an investor right now and stay sane with this market's behaving like this? Okay? Now here's the deal, guys. Inflation is sitting at about 8.5. Right now our interest rates are about 3.35. Okay? If we're that's a negative more than 5%, right? So for us to get inflation down, rates have to go up equal to or higher than the rate of inflation. Okay? 1982, Volcker had rates 3 points higher than the rate of inflation. Okay? So that would bring us with a Fed funds rate of 11.5. I seriously doubt they're going to bring it up that high, but that was the recipe for the success that Volcker had, and it set us up for 40 years of rate cuts, right? So the idea that the Fed is going to pivot, now they're going to raise I think it's pretty much already baked into the cake, that they're going to raise rates 3/4 coming up at the beginning of November, and I believe that will happen. They're also been talking 0.5 point lately, more lately, 0.75 point again in December, which would bring them up roughly to their old target, which was 4.75. Now they're saying 5 to 5.5, so that would say more rate increases coming, another 0.75 points coming. I think they're going to stick to their guns on this, guys. They understand, and we've been explaining, that raising interest rates alone does not bring down inflation. Raising interest rates, especially when you raise them beyond a certain level, brings on a pretty strong recession, which then crushes demand, which then brings prices down. That's how Volcker did it. That's how they're going to do it again if they really are going to do it. Well, if that's the case, okay, they understand there's going to be a recession, so the idea that, oh my God, these rate increases are going to cause a recession, is they understand that. That's what their target is. That's what they're trying to do. So this is not a surprise to them. It's only a surprise to the people out there who aren't watching this show and other shows like it, right? So the recession is going to come along. We all know that the Fed and St. Jerome himself has said this, that the Federal Reserve feels like they need to have a softer labor market. So they're going to bring unemployment up. They're going to bring this recession on. It is exactly what they are working toward. So these yo-yos coming out and saying we need to consider the rate increases could be a cause of recession, they're bullshitting. You cannot get to be the chairman, or not the chairman, forgive me, the president of a Federal Reserve Bank and not understand the most basic concepts. So when they say this stuff, it's for effect only. It's not about policy. They're not going to change their policy. They're not. Okay? So get ready for this. This recession is going to happen, even in spite of all these amazingly sparkling economic numbers. I think if we didn't have inflation right now, if they hadn't done some of the things they've done, people would be loving this economy. Because, there's jobs, people are earning more money. If we didn't have to spend, $5 for butter and $20 a pound for steak, this economy would be, or even gas, I had to pay $5.69 the other day. People would be loving this economy if we had prices we had 2 years ago. So it's just the craziest times. But know this, guys. These rate hikes are going to continue, regardless of what the market says on a day-to-day basis. The market loves these rumors, this rumor mill stuff. And I guess some consistency in their messaging would be a good thing for the Federal Reserve, but it is what it is. But know this. The number one mandate the Federal Reserve has is to keep inflation low. Their also mandate is full employment. Well, they've already got the employment thing. Even if they raise the unemployment rate to 4.5%, which is what they're talking about, I think it'll go higher, but it's really low compared to the 10% unemployment Volcker had to bring. So, no, they're going to keep those rate hikes coming. The recession that's already here, very mildly right now, is going to get worse, okay? Anyway, that's it for today. That's it for the weekend. One last thing before I go. I don't know if anybody saw this story. It slipped by me. Here in Vegas, a lot of people love Vegas because we have these buffets in the hotel casinos. One of my favorites, man. You go in there, you pay a price. They got all these different foods from all around the world. You get to try everything, and you can eat as much as you want. Well, one of the big things they've had on these buffets for a Brazilian years is snow crab. So it caught my eye, an article about snow crab. They actually had to cancel the snow crab harvest in Alaska this year. Most of these snow crabs are in the Bering Sea where the water's super cold. They actually had to cancel the harvest this year because of a mass die-off in snow crab. The water, as the climate's getting warmer, the oceans are getting warmer, getting more acidic, and this is causing a die-off of snow crab where they actually had to, I don't even know if they're going to have snow crab for sale. Going that way, right? But listen to these numbers, guys. They took the survey. They went and looked on the ocean floor to count snow crab, believe it or not. Well, the numbers have fallen off a cliff. The last time they surveyed was 2018. There were 12 billion snow crabs. 12 billion. Over, right? Latest survey they just did one, less than 2 billion. An 84% die-off of snow crab because of the warming oceans. That, when you look at something like that, doesn't it make all of this silliness about interest rates and stock markets and finance seem insignificant? That is not good news for the world, guys. Anyway, sorry for the bad news again. Going to be a great weekend, though. The Bills are off this weekend, so I got no pressure on NFL. I'm just going to enjoy myself, get away from these markets and this craziness for a little while. I want to apologize again for missing yesterday, sick, and I want to let you guys know now I will not be on Monday. I'm traveling on Monday, but I will be back on Tuesday to bring everybody up to date on not only what happens on Tuesday, but whatever we missed if something significant happened on Monday. 3-day weekend for Uncle Chuck. You guys take care of yourselves. Be good to each other. Do something fun this weekend with your families and your friends. Get away from these markets. Get away from money and even thinking about it. Enjoy your life, guys. We'll talk again on Tuesday. Until then, take care.